I think what got me most fired up about this press release is that they didn't actually show a ton of revenue from the data deals. Meanwhile, their ad business clearly seems to still be chugging along, which that I did not expect. I was actually fairly kind of bearish on the ad business and thinking data is the only way to make this work. And I'm kind of proven wrong immediately. So like, I would say this exceeded my expectations pretty much across the board. And the valuation's lower than when we looked at it last. So I'm kind of quite interested.
On a valuation side of things, I definitely try to prioritize like trying to conduct a DCF model to figure out what the intrinsic value, but when a company hasn't been consistently free cash flow positive, it's quite difficult to do that. And so then I resort to like these other valuation metrics, whether that's price to earnings, price to sales. And in Reddit's case, they have a price to sales about 9.45. The other one we can use based on the company's free cash flow, and since it being positive this past quarter, is they generated about $29 million in free cash flow. So you could, on an annual basis, let's just say that it's about $120 million. And the company's trading at a $8 billion market cap. So this is less than 1% of a free cash flow yield. And, just comparing it to something like a 10-year treasury or anything like that, that's sitting around 5%. So based on that valuation, like it's difficult to buy into a business if you're going to likely generate a yield that's lower than the market cap or the treasury yield. But then also just from a standpoint of even using like a price to sales, it seems high. That's the only thing is I would, it's a great business and everything seems like to be going well overall and they're trending in the right direction. It's just if you overpay for the business and over the long run, it corrects to say a $4 billion market cap instead of an $8 billion, though, even though you chose the business right and you knew that it would last long, your return on investment will be dismal kind of thing. So that's just where I'm hesitant from that side of things.
Fundamentals. What's up, everybody? Welcome back. This is episode 20 of the Beyond the Edge podcast. We got a full house, small cap Kev right here, Mr. Fundamentals, trend tracker as well. It's going to be a similar format as we usually do, but we're coming back on a couple stocks that we've been discussing a few times in the past. First of which is Reddit. I think if give you a little recap of where we left off, I think we were all pretty stoked about the stock. Pete loves to just talk about their data and how much value is in that. I think there's a lot we can discuss on that topic. Declan, it's always a little harder to convince when it comes to these tech deals, but curious to see your input on this one as well. So let me just kind of jump straight into it. They released their financials recently. A couple highlights from that. Their daily active users, they increased 37% year over year, all the way up to 82.7 million. That's a lot. In addition, revenue has grown 48% year over year to 243 million. I think that one took me by surprise. What took me even more by surprise was that it's actually their ad revenue alone increased 39%. So huge growth in that. We'll discuss the other potentials for revenue. Finally, big loss, $575.1 million. But keep in mind, they just went public. So by far, the majority of that was stock option compensation. So you adjust those numbers, you would have had their first profitable Q1, which is great. We'll see that in the future if that actually comes to be a reality. So let's just jump into it. Pete, Reddit. Do I even need to line you up with anything, or I just say Reddit, go?
I don't know. That sounds like a great company to me. Thanks for all those numbers. Maybe mentioned this earlier in the year that I thought Reddit was going to really scale up. I think I'm happy with the way things are going. I'm a little even surprised about how good the ad revenue is, but It is users are going there and there's a lot of dialogue and there's a partnership with Google. So a lot of things are kind of working their way and that they are basically being leveraged to create better AI models.
Mm-hmm. Actually, you touched on advertising. That's obviously your bread and butter. Have you ever advertised on Reddit? Clearly it's growing, but I believe where we left off, you were telling us that it's like the average revenue per user was quite a bit lower than other sites. So how bullish are you on their business, their ad business?
So here's the thing.
The ad business.
So here's the thing I'm bullish on is that Google drives, 60% of the world's traffic, 68% of online experiences start with the search engine in general. For reasons I might not get too into, is Google has really improved Reddit in search rankings. They weren't like over the last few years, Google has really rewarded Reddit. They're saying, yeah, you're going to start ranking for all these things. So Google controlling, let's say, anywhere between 70% of the world's internet traffic is steering that to Reddit. That is thus going to improve the value of advertising on Reddit. About a year ago, when I started seeing this happen, and all of a sudden Reddit's domain authority became 99, it's a super trusted source in Google. I was really wondering why they were doing this. I mean, tinfoil hat on, you see a partnership and then them buying their data to train their AI model, and all of a sudden it makes a lot more sense. I don't see Google stopping that. Google is super powerful when it comes to eyeballs. They're one of the largest advertisers in the world. 80% of their money comes from advertising. They know AI is here. They know they need money from AI. They're using Reddit data, kind of piece, and you guys seeing this puzzle come together a little bit.
Yeah, it's it. Well, to your point, Pete, I think maybe I had discounted this fact a little bit here, but Reddit is ultimately a search engine within a search engine. Mm-hmm. And so what I think is unique about them, though, is that you don't necessarily have to create your own website or blog or any real platform because Reddit already exists. And so I think that's maybe points to why Google has been rewarding Reddit, is because you can propose a query and people, no matter where they come from, no matter what perspective, whatever angle, they're able to write about it freely on the platform itself. And then Google can then distribute that. So that just allows another level of accessibility that usually isn't there if you are forced to have to actually create your own blog. So to your point, I think that's one thing that I had maybe neglected in my initial analysis of the business, but it's also something that provides them to some degree a unique advantage over other competitors.
Yeah, I agree. I mean, it's wild that Google will rank some things. I think over the weekend, I was Googling Kendrick and Drake beef, and a subreddit popped up first. I'm not certain of the exact query I put in, and the subreddit pops up that's like rap beef. And I really shocked that there aren't other blogs that are really above that, above like just a short dialogue between people talking about rap beef. I mean, but we could talk about that topic on another podcast.
I'm curious, guys, like, what do you think if Google is now able to legally use all of Reddit's data, and they have, Gemini obviously had an absolutely terrible start, unless you think George Washington is Black or Asian, then maybe they're off to a great start. But other than that, like if Google now has access to all of Reddit's data, and then they have their own Gemini, which is going to become, I imagine, the future of search, are they just going to not be directing traffic to Reddit at all and instead just feeding them the net result legally? Could that be a major risk to advertising dollars from Reddit's business point of view?
Well, I think that one thing that I've kind of been grappling a lot, because this is a common conversation, is like, are these generative AI models going to take over all of internet searches and queries and the whole search engine process? And what I think may happen is there's going to be a place for, say, platforms like Reddit, where people ultimately want to have a conversation and perhaps a wider dialogue about a certain topic. And that's where these search engines generative AI models are not really going to be able to supplement, because you're not having that human to human interaction where you're perhaps discussing a topic that maybe doesn't have a factual answer. Maybe it is somewhat ambiguous or qualitative, and you have to, ultimately, you're just trying to enhance your perspective on the thing. And so that's where I think something like even Meta and social medias in general have an advantage, whereas these generative models are certainly beneficial. It's just not, I don't think they're going to replace it altogether.
What do you think, Pete?
I think Declan brings up a really good point. And then I think from a user experience, I've been on this for a while, of the intent of the search, right? Something I look at every single day. But let's say the how-to models, right? Like, how do I do this specific thing? the generalities of Google searches and people's blogs, like that's still there for a certain audience. Like, like there's people that aren't going to adopt to a large language model for a very long time. Like maybe we're digital natives and we just figure it out. It's not like there was any instructions. It's just this window and you just use it, right? That might change with UI and UX. So I think there's a certain type of person that is going to, how do I do something? Go to ChatGPT, go to Gemini. Some people might still want blogs. As Declan's referenced many, many times, Gen AI models have limitations as well. So I think that's where, Google saw fresh data being able to be fed in the form of dialogue to educate, their Gen AI models, which will make it better in the future. And that's probably why they're doing it. But then as Declan says, like the intent of, I don't want something factual. I just want to see what people are saying. When I was, okay, I'll go back to Kendrick and Drake. Did I want an update first because these guys kept dropping record after record and I couldn't keep up? I just needed maybe a quick summary. Sure. That wasn't going to be in any LLM and it might not be there till the next update. And then, after I got my update, I was like, shoot, maybe I'm going to go back to that Reddit and see what people are saying. Like there's no right or wrong. It's like, who won a rat beef, right? There's no right or wrong. There's opinions. So again, what's the intent behind these searches? That's going to change the journey a little bit. Is Google going to get hit? For sure, a little bit. They already are actually. They've already dipped in terms of usage. Yeah. So
have you guys had a chance to play around with Meta's new the website meta.ai? Have you checked it out yet?
No, I haven't.
It's very impressive for a few reasons. One, you don't need to log in. You can literally go to the URL meta.ai and start using it just like GPT. That's one thing that's impressive. If you log in, it saves your history. That's a little bit more helpful. But I was doing a lot of like side by side of the free ChatGPT versus the free Meta AI. And more often than not, I was using the Meta answer. I found they're a little bit less sensational. It was a tiny bit slower to produce the result, but it could actually look at live data. So like I was trying to ask it about Reddit's financials and it was able to pull out some relevant information from a press release that just happened. So in contrast to ChatGPT that only has historical data, they're now starting to get more like real time. It's still a little clunky, like it struggled with a lot of my questions, but we're talking about a free model with no login. Meta is coming at this hot. So I will be really curious what that does to impact Google. The interesting thing is actually it was sharing Google links as part of the sources. So it wasn't like it almost felt like an Apple Google partnership where you go in like the search bar and you get Google search terms. It almost felt like something like that. So I'm curious to see if there's a partnership brewing, but just the general search landscape is going to be something to watch. It's very interesting to see what's going to happen.
Absolutely. And it's whatever was training these models is really interesting. I'll have to try Meta, but they're all starting to kind of find their niche, I think, a little bit. And really the next step is, I think I've said it before, is retrieval augmented generation of the personalization of your LLMs. But I've started using a new one called Anthropic. And they have a version, their paid version's called Claude. This is the best writing. This is the best writing I've seen. I think we're all at a point now where we can kind of spot ChatGPT writing. I've never used a semicolon that much in my life. I think there's a bunch of other tells for the people that have been applying for our job posting. You really have to adjust the formatting. If you could do that one step, I would really know that ChatGPT didn't do it for you. Although I respect the hustle. But yeah, I think there's quite a few things that we can all catch. This one, Anthropic, was for writing was incredible. Like it can write. I can't decipher it, my writing versus it, after I did a few prompts to train it to write like me, which is
interesting,
both scary and awesome at the exact same time.
Yeah, I'm familiar with Claude. I haven't had a chance to use it yet, but I hear they bring it up in the All In podcast all the time. So it's been on the list of something to check out. Yeah.
Well, just one point on that, because I think you guys are all discussing something that's important, is there to some degree there is a niche, but I do think that there is a convergence of these technologies where essentially you can swap from one or the other and there's not really no cost associated with that switching. And that's going to be the business case or put that economic potential into question is, okay, if everyone can switch and it's for free, and say like a company like OpenAI is banking on GPT-4, GPT-5, well, if Meta offers a free version and perhaps Google chooses to do the same route, maybe Apple in the future, well, then what business model do you have and how are you going to make money, especially if they're all performing relatively at the same level, or compared to these companies that have way more cash and are free cash flow positive that can continue to just build and build and build versus, again, an open AI, which is much more constrained. So it's a question of, yeah, it's great for, say, all of us because we get to use these and benefit from them. But from an investment standpoint, again, where's the competitive advantage?
Well, yeah, let's hear this. Let's tie back to Reddit, Declan. So what do you think about Reddit today versus 5 months ago?
Yeah, I think it's still the same platform itself. I just probably overlooked my assessment more than anything. But it is impressive what they're doing. Like one of the other financial metrics they had was a gross margin of 88.6%, which is unheard of. Like that is extremely impressive. And so I can't discount them for that. It's just, and this is to your point about Data Pete, is they had daily active uniques of 82.7 million. And Meta has 3.24 billion daily active users, whereas Google has 8.5 billion searches. So there's certainly much more data being gathered there. And I just don't know if this goes back to our conversation about AI and everything, but if data and scale is necessarily going to be the answer, or if a different approach is going to allow us to kind of overcome some of those hurdles and limitations. And even like you said, about like the Drake and Kendrick beef is, well, you're not going to learn about it on a generative model until it's updated. Mm-hmm. Problematic. That's not real time. So if there is other opportunities, then perhaps the approach and everybody, salivating over data, it may not be as valuable as it could be, but I don't have the answer to that.
I'll comment a little bit on that. And then I want to hear if you would invest in it after, by the way. That was my question. But one, the unique visitors, I would say, are not apples to apples, because think of your interactions with Meta. How much are you actually inputting? The average entry into Google search engine is 3 words. The average entry into a Reddit post is quite a lot more. So from a data trading model, that's why it's super valuable, because people are just inputting a lot of things. From an advertising model, I think that was your hesitation from the get-go. And I tend to agree. It will likely never reach the heights of a Google or Meta in terms of ad dollars, because you do need those eyeballs. But it has a very unique positioning in being like a very big dialogue. I think the next one that could really be there too is Twitter. Twitter has an immense dialogue, like it or loathe it, it's there. So yeah, I think that's kind of what's interesting. But seeing what it's done, Declan, is this something you would now put on your watch list and something you might invest in?
I think that the business itself, yes, it's like a fundamentally sound business, but from a valuation standpoint, like I would wait for it to correct quite significantly before ever like actually putting money towards it.
Yeah, I think that's interesting, because me and Kev kind of called that one out, that like you're going to see this thing's been private forever. We said even if it did well, we were very much expecting it to be where it is now. I think even a lot of this news was priced in.
How long has it's been? What, maybe like a couple months since the IPO? I feel like it's pretty recent.
I'll check.
So I mean, if that is the case, we're kind of still within that 6-month window where I'm imagining a lot of the inside stuff still hasn't come off yet, unless it's been longer than a few months and I'm just have no sense of time and space anymore.
Yeah, it's actually only been 6 weeks. It went public on March 21st. Yeah.
So we've still got a long way to go to see what starts unlocking. But I mean, from my point of view, like I would say they were $10 billion. And at the time we were pretty impressed because revenue is growing 20% year over year. And when you've got, significant revenue, 20% is a lot. Well, we see these latest quarterly revenue, growth is even more aggressive than that, coming in at 48% quarter over quarter. So, or year over year for the same quarter. So wildly impressive growth. I think what got me most fired up about this press release is that they didn't actually show a ton of revenue from the data deals. Like if you look at it, it's only really like $20 million. So that means there's a lot of room for that to grow, right? Meanwhile, they're in their ad business clearly seems to still be chugging along, which that I did not expect. I was actually fairly kind of bearish on the ad business and thinking data is the only way to make this work. And I'm
Mhm.
kind of proven wrong immediately. So like I would say this exceeded my expectations pretty much across the board. And the valuation's lower than when we looked at it last. So I'm kind of quite interested.
Well, a few points. I think just first and foremost, talking on the data, there's certainly room. It's just, again, I just have a really difficult time like knowing how to value data in that sense. And again, if these are all like closed systems where it's not like we have access to
Mm-hmm.
all the data that they're gathering, and so you don't know how valuable, say, each point is per se. The companies do, but we as users and viewers from the outside don't necessarily do. So it's tough because maybe 20 million, the reason it's $20 million only is because people don't value that much. Or to your point, it could be because there's a long growth way and they're just like testing it out and introducing it. The other thing I was going to say, just on a valuation side of things, I definitely try to prioritize like trying to conduct a DCF model to figure out what the intrinsic value. But when a company hasn't been consistently free cash flow positive, it's quite difficult to do that. And so then I resort to like these other valuation metrics, whether that's price to earnings, price to sales, and in Reddit's case, they have a price to sales about 9.45. The other one we can use based on the company's free cash flow, and since it being positive this past quarter, is they generated about $29 million in free cash flow. So you could, on an annual basis, let's just say that it's about $120 million. And the company's trading at a $8 billion market cap. So this is less than 1% of a free cash flow yield. And, just comparing it to something like a 10-year treasury or anything like that, that's sitting around 5%. So based on that valuation, like it's difficult to buy into a business if you're going to likely generate a yield that's lower than the market cap or the treasury yield. But then also just from a standpoint of even using like a price to sales, it seems high. That's the only thing is I would, it's a great business and everything seems like to be going well overall and they're trending in the right direction. It's just if you overpay for the business and over the long run it corrects to say a $4 billion market cap instead of an $8 billion, though, even though you chose the business right and you knew that it would last long, your return on investment will be dismal kind of thing. So that's just where I'm hesitant from that side of
Mr.
things.
Fundamentals.
That's
That's a good
right.
description. The one thing I wonder is I don't know if this business is either seasonality. Is there seasonality to ads? I'm not really sure. Pete, what do you think?
Yeah, for sure.
There
Q4
is.
is the busiest time. Like think of Black Friday, Christmas shopping, like e-commerce ads really go up.
That makes sense.
Yeah.
Because then if we're seeing 243 million in the latest Q1, which maybe isn't even the busiest quarter, if you were to annualize it, which maybe you can't multiply it by 4 and say, hey, they'll probably hit $1 billion in revenue. In that case, then, the valuation would come down a little bit from what you were putting it at. But yeah, understanding it's certainly not a cheap stock. It's just a matter of can they keep the growth up? Because if they're growing at this clip and they can somehow consistently do that, maybe even accelerating through data deals, then they're going to be able to get a much higher multiple in the market.
What's their valuation right now?
8-ish billion, give or take.
I likely see them getting taken out. I think they're going to get acquired then.
Get acquired, hey? Like Google,
Yeah.
just buy the whole company.
Yeah, I think so. Like, why wouldn't
we have
you?
another antitrust arbitrage scenario to look at.
Yeah, that would be the only thing to stop it. Like another deal that doesn't go through, but one of these, bigger companies. Like at the end of the day, everything we're doing, the way tech is set up, is still flowing to 7 companies. Or if you get big enough, you just get bought. So, I mean,
they don't let it happen anymore.
Yeah. Well, there's a good reason why you shouldn't. You're talking about having access to this much data on people.
Right.
Yeah.
Well, we'll see. I mean, hey, for the next topic is rather than kind of continuing with another company, I wanted to kind of, obviously the three of us, we're up here in Canada. A lot has changed over the last 8 years. Even more has changed seemingly over the last couple of years. It's hard to find somebody who's satisfied with the direction of where things are going. And let's try to not make this too much about, this party sucks, that party sucks, or whatever, and more about just like policies and what we're kind of seeing as people who live here now and have lived here forever. I know a lot of our a lot of our audience is from the States. Guys, if you're from America and you're watching this, watch us as a warning. Like, I think it's still something that you're certainly not out of the woods. You could find yourself in a similar situation, not too far off. So use this as a case study. So we wanted to allocate a little bit of time just to kind of chat about our thoughts and what we're seeing out there. And I think we're all pretty passionate about this subject. So we'll try to keep it as factual and not too, well, there's opinion, but not too like partisan kind of opinion. Just a discussion. So, I mean, we live in 3 different parts of Canada. I'm in Vancouver, which is in BC, quite left-leaning of a province. Mr. Fundamentals, Declan, you're in Alberta, the opposite. You had like your little left-wing, for like a very brief, like couple years or something, then you're back to
little blip.
little blip.
Yeah, the American audience, think of that of the Texas of Canada. It's a good comparison.
Yeah, it's the Texas of Canada. Is a biggest rodeo in the world, isn't it? Anyways.
That's right.
Pete, what would you call Ontario? I don't know. Are you guys left, right? Like, where is it? Pretty center, I guess.
No, there's like so Toronto is actually quite, downtown Toronto is quite left. And then it's absolutely encapsulated by conservatives on the horseshoe around it. So that's interesting. I always find it actually interesting, even with the cost of housing and living in Toronto, how many Liberal voters there are. Not that we have any bias on one way or another.
Yeah, follow our personal socials if you want to see our actual opinions. But a couple things have happened. I think, we're seeing housing prices just have been ballistic for so long, to the point where it's nearly impossible for a normal family to buy a home anymore. So you're forced to rent. The government's response has been to build a massive amount of housing, but let me clarify, they want to build a massive amount of housing. But builders associations are basically saying, good for you. You threw a giant number onto a budget. It's physically impossible to build this much. And at the same time, we're letting in a gigantic record number of immigrants come in. That's just making it the housing market more competitive, the job market more competitive. The number of employment claims has been surging, up 20% over the year. And they just increased, they're looking to really significantly jack our capital gains tax up. So a few things we're not thrilled about. I don't know if you guys... Pete, kick it off. I know you got lots of views on this. What are you kind of seeing on your side of the country?
Oh, yeah. I think what we're actually seeing is the people in the middle probably getting hurt the most right now by some of the policies that are happening. Small businesses, you had a stat about insolvencies going up, an absolute up crazy 87%. Amount. Yeah, I think that's what you're really seeing get hurt. And I think, if you look at any North American lifestyle, the middle class was really what some of the dream was about, that you could own your own house, maybe two car garage, dog and 2 kids, and have your neighbors over for barbecues. And in Toronto, that is so far gone for most people. Yeah. The idea of that is really gone. That middle class house is a $2 million house now. Like, it's, that probably is really... Oh, yeah. Wages have not kept up with inflation. Wages have not kept up with, what real estate is doing. And it was like, we didn't want to get too much into policy or government, but this completely aligned since 2015. And why did this not happen in the States? Yeah, housing's gone up, but not like this. So I think there's a lot of contributing factors. A huge mistake on supply and demand, for sure, as well, with an immigration policy, which is, you can feel however you want about immigration, for it or against it. The one thing I will say is you have to have infrastructure to support it, which we do not. If we are already in a housing issue, getting more people who need housing and housing not being built is going to drive up the cost of housing. Inflation and these being, physical assets is also going to drive up the cost of this housing. And what we were supposed to see relief in a rising interest rate environment, we did not see. So this further complicates things. And if you keep making more and more people come into the country, that's going to make housing, an issue. And, I don't think Canada, first and foremost, has invested in the infrastructure it should across the board. And really, I think that's where you look at a lot of the policy spending. This government has spent an inordinate amount of money, more than any government before it, which is one of the leading drivers of inflation, continuing to borrow money, is making life more expensive. And they're not putting it into the services that maybe I think we should, which would be infrastructure and support businesses. Instead, you're seeing these businesses really dry up in the middle. And then maybe some of the bigger businesses get bigger. We're really a country of oligopolies. The banks didn't get any smaller. The telecom companies didn't get any smaller. They're not getting hurt, and they're not keeping up with wage growth for their staff. As an everyday employee, because life got 30, 40% more expensive in the past few years, you don't get to go. You're the last one that gets the benefit of that. So the people in the middle are just getting absolutely crushed, and it's not good for anyone.
Yeah, it's not. It's the irony too that they claim that these policies are supposed to be built for those in the middle, but it seems to incentivize those who are very poor by having a lot more social safety nets, a lot more checks during the lockdown and stuff. It seems like everyone was getting checks, and the irony of that. It pays to, if you want to just chill, live a life on the streets. It's a great place to do it, I suppose. Up until recently, you could even smoke crack in the hospitals and at parks and stuff legally here in BC, but they've actually just repealed that. They're going back to criminal.
Yeah, Toronto's trying to pass it. Toronto's trying to pass the decriminalization of it, even though we just
gave up here, man.
Second biggest city. Yeah,
it's a mess. It's gotten so much worse. There's active drug use out in public. I saw somebody, I feel like I don't know how many words I can say on this pod before I just destroy our ranking with Google, but lots of active drug use in public, like very openly in public, and it's just gotten way out of hand.
But yeah, and I mean, I feel like we kind of lost our identity of what we are as an economy, and like what are we trying to do here? Like our job is really to come together as a society and create like products and services that the world wants. We also are incredibly resource rich. How do we get these out of the ground and sell them to people and bring cash into the country? If we're reliant on government spending to make up that gap, and it's going to services that don't really benefit everyone, yeah, you're going to see inflation. You're going to see these other things. But if we're building roads to, oil fields and better airports, you're creating, as a government, now you're creating jobs and you're creating long-lasting infrastructure that then incentivizes new businesses to come in or new people to start businesses. I think we are at the lowest level of residential housing starts we've seen in record time, the lowest level of people creating entrepreneurships, and then they make it harder by taxing, corporations more. So this is what I mean about what's the identity? Like what's the end goal here? Like what are we as an economy now?
Well, Declan, I'm curious. Yeah, you're in the heartland there. You're in, as far as I understand, tell me if I'm wrong here, but all the jobs that have been added in Canada over the last few years, almost the majority have been in
government jobs. They're government jobs.
The exception of actually Alberta. I believe Alberta is still chugging along. I haven't been there in a minute. So like, Deck, what's it like on the ground out there? How are you seeing things?
Yeah, I would say like particularly in Calgary, the economy has been like generally productive overall. I think the influx in demand of oil and gas and energy overall helped kind of restore some of that stagnancy that had existed, especially in years prior. And so overall, I think it's well, especially too from a municipal standpoint. They're doing a lot of things to encourage tech companies to come into the city and start developing that culture. And so those are a few points that I think have helped us withstand it overall. But that being said, the housing crisis still is as prevalent here as it probably is in Vancouver and Toronto. Between my fiance and I, we've been trying to find a house and buy a house, and it just seems virtually impossible right now at these prices. Now, I did want to go back to something that you guys were discussing and kind of like look at this from a top-down level. And to some extent, it is looking at it with a hindsight bias. But I do believe that the current economic situation was inevitable, and it has happened before in the past. And the reason that is as we all are familiar with, there are these economic cycles that we go through, and some are shorter than others. And you look back to the long-term debt cycle, the last time there was really a crisis, it goes back even as far as 1929 and the Great Depression. And so what you're seeing here is we have endured a long period of economic prosperity, especially throughout the 1950s and 60s. Things went well. Then inflation got out of hand and there was issues. They jacked up interest rates and there was a lot of calamity in the mid 80s. And then it kind of settled down. We come back, we have another economic cycle, and it blows up to the 2000 tech.com bubble. And then we ultimately had a housing bubble that extended and like throughout both America, but ultimately the globe as the great financial crisis. And so what I think we're facing here is a similar period where we had a low interest rate market that ultimately was like historically never seen. It was unprecedented. And we had 0% interest rates. We had a lot of stimulus flowing into the economy. And as a result, we've kind of reached this period of excess now where inflation remains prevalent, but we're trying to tamper it to some degree with interest rates at where they are now. And so whether you're in the United States, Canada, or really ultimately most places in the world right now, you are dealing with these economic repercussions that are a product of trying to some extent manipulate the economy and both stimulate it but temper it. And this is causing us to be in this period of like stagnation that I think has just been problematic overall. But I think the thing that people have to realize is that if you zoom out, this has been happening throughout human history. We face these economic cycles. And so this is a prime opportunity where, okay, yeah, things are hard right now, but what are you doing to kind of prepare yourself if things do go awry? And when they do go awry, how are you going to take advantage? Because it's those opportunities of chaos that present that next generation of growth and wealth. And if you're ready for it, if you're doing things to prepare yourself, you'll be much better off than those who either are too short-term focused, think the world is ending, or just fail to do anything to prepare or take advantage of those opportunities.
Yeah, I mean, I agree with a lot you said. Obviously, economic cycles are very real. But I would say in Canada, I feel like this time around, it isn't like in '08 or in '01, where '08, it was absolute lack of oversight and complete greed. And, really created an environment for their consumers to overextend themselves through really bad debt and then repackaging that a bunch of different ways. And, in hindsight, a little bit easier to understand. And then, okay, we have to go back and fix that. Maybe, it being loosely regulated was a really bad thing. '01, again, a lot of greed, this and the other. With this cycle, the government spending is the issue. I think we have a Canadian government that amassed more debt since 2015 than we had ever amassed combined previous as a country. So I think it's just like understand, since, okay, we've got off the gold reserve whenever we did, what was government debt supposed to be for, right? A bit of a shortfall, not the like backbone and policy itself. Like, it's like, have a vision. What are we doing as an economy here, rather than government just borrowing money and spending? And that's definitely a huge driver to, our inflation here. Obviously, if you're creating more of anything, it becomes worth less. Declan, you're invaluable because there's only one of you.
With advanced cloning technologies, who knows? There may be 3 Mr. Fundamentals next call. Like to piggyback on that, like I'd say government spending, government debt, like none of that's a bad thing inherently. It's just, what are you spending on?
Exactly.
The same way, like if you're taking on debt to fund a budget shortfall because you spent too much money on benefits that aren't mission critical, and then that's bad debt. That's bad deficit. But if you're spending it on, just like you said, Pete, on improving infrastructure, highways, power lines, sewage facilities, like stuff that benefits the economy over a long time, it just costs a lot of money to build up front. debt is obviously very appropriate, even more appropriate if it's some kind of asset that can produce value. Like if it's a highway, you can put a toll road on. If it's a hydroelectric dam that you can be then selling the electricity to citizens, but also foreign countries, then it makes sense. But the problem is what we're doing is we're taking on so much money to give it where it's not necessarily needed. One thing that I wanted to discuss is our massive productivity problem.
That's
You
it.
think of Canada being a first world country, highly productive, good machinery. It's not. We have been lagging behind the US and other countries for years and years and years. And it's just getting worse. There's just hasn't been enough business investment in productivity, advanced manufacturing, like machinery, technology, research and development to really leverage things like AI for like efficiency. Like you just haven't seen that level of growth. So, I'll let you guys both answer, but starting with you, Pete, what are your expectations for, I guess, future productivity growth in Canada? How's that going to impact?
I see nothing
Yeah.
in the short term that gives me hope to solving this productivity problem. As an entrepreneur, this is something I'm exposed to, whether it's, our employees are all great. But what I see it is in other organizations, and the difference between how Canadian and US organizations run is night and day. I can just give you this in decision making on our sales team. If we are pitching a US client, their time to decision is half of a Canadian client. That's them getting back to you faster.
It's probably like a quarter.
They're making decisions faster. They're getting back to you. Like Canada loves like just saying they're like a Canadian prospect loves saying they're busy and that they can't get back to you on these things. And this isn't all Canadian businesses, but I'm saying as someone who's done this for a while, our American clients are like more productive. They're getting things done. They are making decisions faster. They're getting their work done on their side much faster. It's very noticeable. So they're also more tech savvy. They are creating the tech. Everything we use as tools in SaaS being this massive industry, they're being created there. So they're like in terms of digital productivity, they just seem to be more digital native. I think if we're like comparing boomers on the two sides, like there's just something about the US that just like gets it. I think it's a little bit more part of their culture to be innovative. Maybe, they don't have the same work-life balance, but I kind of feel like they do too, because they're just being more productive in the time that they're there. And then you've seen their wage growth drastically overtake what Canada is. Mm-hmm. And that's when, what does that do is we get even more brain drain that if you want to make more money, you're going to go work there.
Isn't that already a problem? Like we have this mass amount of like foreign immigration, but we're actually having this supposed emigration crisis of people trying to leave the country. That doesn't surprise me, but it is a little bit of a new soundbite that I wasn't super aware of. And of course, the Canadian government's response to that is to throw another tax on, in addition to the departure travel tax, to force people to stay as best they can. So it's interesting. It goes both ways. Seeing people leave tells you a lot of what you need to know.
Yeah. Totally. I think 2 points to that is, first and foremost, personally, I am more favorable towards less government involvement and just greater promotion of the private sector and allowing businesses and entrepreneurs to deploy that capital. They, first and foremost, the US is a great example of this, where when somebody like an Elon Musk or a Jeff Bezos, whether you love him or hate him, they're able to accumulate so much capital that then they can ultimately deploy in one way or another, whether it's through another business channel or through philanthropic endeavors. But usually those are much more organized and directed. They have a good structure compared to something that is tied to the government, where it's very bureaucratic. Things are slow, like you guys are saying. And that's probably a big problem with Canada overall, is just how slow things tend to go. That's part of the reason why, the financial crisis wasn't as bad here, is because we're a little more conservative to that extent, where we didn't let things go as loose. But, sure, maybe the US is more volatile, but you're also creating a lot more innovation and the like that way. The other point is actually a big thing that you talked about, Pete, is just the cultural side of things. There's a great book. I actually have it just right here. Had it ready for this, but The Geek Way. It's by Andrew McAfee. But he basically did this like case study on Silicon Valley and trying to understand what makes Silicon Valley, where I think it's like 60% plus of the world's businesses based on valuation are concentrated in the small condensed area of the United States. And it's talking about culture and exactly what you guys said. These cultures within this little area, they encourage risk taking. They're saying, you go balls to the wall, try and build a business, build it fast, scale it, take risks. And who cares if you lose money and fail, because you're ultimately creating this iterative process where businesses will continue to develop and advance and progress. And that's why you get the Apples, you name it, Palantirs, PayPal, everybody most businesses anyways that you can think of from a technological standpoint come from that. And that's just because they're fast. And it goes back to the old meta adage of move fast and break things. That is very highly encouraged in the United States overall. Whereas here in Canada, it's kind of like, well, if you even look at the TSX versus the S&P, the top 10 holdings in Canada are bank stocks, railroad companies, and energy and utility. Whereas I think 9 of the 10 in the S&P 500 are tech stocks, whether it's Microsoft, Apple, Nvidia, Amazon, Meta, you name it. Like there's such a contrast in the types of businesses that are leading our industry forward that you're just breeding this culture of industrial age businesses that are full of bureaucracy, are all about processes and not trying to challenge the status quo. And you're not going to advance. We love growth. Everybody loves growth. Everybody wants their economy to grow. But if you're not breeding a culture that supports that, then like, how the hell are you going to grow? And especially like, I love the UAE is a great example today of a nation that, was primarily oil dominant, but now is like, okay, maybe we are way too concentrated in this one industry. Let's just invest like crazy in new technology. Sure, we're probably going to lose out, but because they're willing to take these risks, I'm willing to bet that the UAE in 30 years is going to be a world leader in terms of just technological expertise and fostering that kind of think tank where people are challenging new ideas and creating, whether it's artificial intelligence or whatever technology. So I think that's just the problem, is we have this culture that is very slow, and we need to find a way that encourages that creation, that entrepreneurship, whether that's through government incentives or just all of us like taking more risks in general.
I agree with what a lot you said. There's a lot to cover. I think the first note, maybe we'll talk about less government intervention, and I think your approach on like trickle down economics. Different people feel different ways about it. I'm not going to get too much into it. I do think to a certain point, employees need to be protected to a certain amount, like a fair amount, because as an entrepreneur and having a lot of entrepreneurial friends, I think it's important employees are created. But when it kind of like comes down to like the trickle down effect, there was a quote that I heard, I think when it's Jeff Bezos talking, you referenced them. I think when they hit about $1 trillion market cap, he was diluted down to 20%. Right. And he's like, yeah, like, I own 20%. He created Amazon. He was the guy who worked, his butt off to make this happen. And he's just like, I created $800 billion for other people.
Yes.
So that's something I know a lot of people, maybe there's a narrative about not liking the super wealthy, this, that, and the other. But these companies that have been created in the United States, some of them have a bigger, I think Google's revenue is more than the federal budget.
Wow.
So yeah, I think so, you gotta think about these things. They are nation, on their own. And when you combine them, they're very, very big. Yeah, Declan, go for it.
Oh, I was just going to quick point on that is Warren Buffett just had the Berkshire Hathaway annual meeting, and he outlined how they paid, I think it was like $5.3 billion in taxes this past year. Buffett said that if 80 companies in the United States paid that $5.3 billion, I don't know if it's 80, but it's somewhere, it's a very small number, generally speaking, they would cover the tax base for the entire US population. So that just speaks to, again, your point of, if you allow businesses to flourish and really grow, and as long as you don't want to encourage bad, like poor business practices and like generate monopolies that are just abusing their powers, But if you allow businesses to grow and invest and allow to use that capital rather than scooping off so much to taxation, unless the government has a really clear idea of how they're going to effectively like generate a high ROI for the nation, then let those businesses do what they do best and grow. And then, yeah, take a chunk, but you can take a smaller chunk because they're so much bigger overall than they would be if you're capping them.
Well, and this is the problem here in Canada is a lot of our tax policy is again affecting that middle. When you think of how the sources of income for the federal budget, more than 50% of it is based off of T4 income, which is salary income, which is hurting, a lot of people in the middle. And it really shouldn't be that way because these people are getting taxed left, right, and center. So not only are they paying this T4 income, they're also contributing to EI as another tax. They're also contributing to a pension plan as another tax. Then they also have their province tax, and then they also have property tax. And then what else? They also have what you guys don't have much of out there is sales tax. Ours is 8% higher than yours here. On any time you want to exchange money on money that you've already been taxed on. So all of this government hands in people's pockets, and if they're not spending it well, it will hurt the economy. And I think the people are on a brink of if the cost of living is going that much and you're getting taxed as much, obviously it's going to hurt the economy. And if you don't have any type of local consumption on some of these things, less businesses are interested in coming in.
And then
why?
To make it even worse, we talk about productivity growth and the reason that businesses haven't been investing in Canada. And our solution to that is massive subsidization when there's votes at stake. Like, for example, there's a new $15 billion electric vehicle plant being built in Ontario. Well, guess what? Canadian taxpayers are paying $5 billion of that. If you do the math on how many jobs it's going to save, they're paying over $1 million to secure a job. So that's our response to a productivity shortfall. But how do you pay for this stuff? Oh, easy. Tax rich people more. Easy, no problem. They won't care.
Next thing you know, it's a massive
immigration crisis.
But it shouldn't be individuals. If we think of like you said, financial services, our banks are worth a lot of money. I think you did miss Shopify in that top 10 on the TSX though, Declan. That's a tech company. It was Canadian.
Yeah. They got
it. Yeah, they got to be in the top 10. But I'm assuming all our 5 banks are in that top 10.
We got one. Oh wait, what about BlackBerry? Oh right, no.
Right.
Nortel. Yeah, oh wait, shit.
In what world should a $200 billion market cap company be taxed the same as a business that does $3 million a year in revenue? This is the problem, right? It's why are they necessarily getting those breaks and showing incredible profits that they do that aren't getting taxed? They're getting taxed the same treatment as, an up and coming company. They pay dividends quarterly. All our banks have a very good track record of paying dividends quarterly. So they're taking a lot of those profits and actually just distributing it to shareholders. A lot of those shareholders aren't Canadians. Right. So how is that helping us out as well? Yeah. Their pension funds, I think, well, first of all, they all own each other. They're all their biggest shareholders. And then after that, you'll see a bunch of international institutions, right, that are taking and they're making a ton of money, not paying maybe the taxes they necessarily should as a bank. And then the commercial service fees are insane in Canada, what you pay as a business account as well. And there's no two ways about it. And it's just at what point should commercial banking be a service that maybe it doesn't cost the bank anymore to move decimals around? Right? They need to, maybe that's where the government steps in a little bit, that this is an essential service of a business is reasonably priced banking. So there's a lot of things that I think they could really look at that would help entrepreneurs and get more people interested in investing.
If only. Well, I think this is, let's leave it there. There's a fun discussion. Okay. Well, it's kind of a bummer of a discussion, but it's one that I'm glad we could have. And hopefully people see some of these clips that we're going to put out and have some of their own thoughts as well, because it's a discussion that we need to have. We got, less than 2 years until an election. So guys, okay, maybe let's move on to the last. It's not really a topic. It's more, we're just coming back on a stock that we've beaten up over and over and over again. It's SoundHound, of course. Nothing revolutionary that I'm going to bring up to you. They did post their financials an hour ago. So we're all just seeing this for the first time, took a quick look.
Yeah, I'm looking.
Nothing that's gonna like change your, blow your mind or anything. Revenue for the quarter is up to 11.6 million, which it's an increase of 73% year over year. Give them credit, that's growing revenue. It's still such a tiny revenue base for a company valued at $1.5 billion. But that is growth. Gross margin is 60%. I would say that's quite a bit lower than I'd expect for a software company, but still within the region of it's healthy enough. They're still losing money. It's not a profitable business yet. They keep showing this cumulative subscriptions and bookings number, which is now up to $682 million. It seems like that number just rises and rises. In my limited research, it sounds like it would be a pretty bold move to put that revenue figure there if it wasn't like quite contractually tight. But as we all know about contracts, there's a million ways you can get out of contract. So I'm very skeptical on that number. And I do feel like by how much they reference it, they're really just clinging onto that number to maintain their valuation, because it's certainly not revenue. I imagine none of your kind of thoughts and feelings have changed all that much on these guys since the last 6 times we've talked about them. Anyone, Declan, do you want to kick it off? Any thoughts?
Yeah, well, I will toss them a bone in the sense that, at least within the quarterly update, they did align that they brought on a lot of new partners, both from the restaurant, like fast food ordering side of things, as well as onboarding more EV-based companies. So I do tip my cap in that sense. Like, it does to somewhat justify the business model and what they are creating. Do I think there is much of a competitive advantage? Probably not. But that being said, being the first mover and getting these contracts, they're probably going to be the voice AI that leads with these companies rather than somebody else coming in later, unless they totally botch it or the quality kind of really diminishes overall. Mm-hmm. Another thing that's quite interesting is they said that they've partnered with NVIDIA to essentially be able to
we know what that
use
does.
Well, yeah, I know. Right. But use LLMs without needing to access the internet, which is or the cloud. So which is kind of interesting in that sense. It's kind of like a domain-based generative model, which I don't know what it, the performance, how that relates to something like a ChatGPT online or something like that is left open for questioning, but I think it's impressive overall. Again, it's just a business that it's not very clear where their moat lies. And in general, their financial performance kind of speaks to there may be some questions overall. So Kev, you kind of raised this point, but if you look at their revenue performance, yes, it went up 73% year over year, but it's down over the past 2 quarters. And same thing, their net loss has worsened in that time period. So maybe they've reached their peak and now they're regressing, or is this just a short-term mishap? Who knows? But it's just a business that it's not very clear whether they are going to reach profitability. And like you said, that bookings backlog, as impressive as $682 million is, how long are those contracts? How much money are they taking into account? And what number of customers are going to back out if they can find a cheaper option or the like. So that's where I'm at with it.
Trend tracker, what's on your mind?
Yeah. I mean, and the voice trend, I've been waiting for this thing to pop forever. I think it's almost been 10 years since I've been hearing that, people are going to start adapting to voice. We had to, on the advertising side, learn voice search because no one was going to use Google anymore. I never really bought into it. It's been literally 10 years I've kind of been hearing this. On the term, I mean, when you look at their valuation, I'm laughing. That even, let's say it's 11 mil a quarter, and they somehow, let's say, whatever, stabilize, and they do 50 mil this year. Someone's got to explain to me how that's worth 1.5 bill, and I don't know. I don't know where the upside is here. I can't see it.
As an investor, Pete.
Hey guys, if you have time on your hands and you can make trades, there's money to be made. But I think
no sarcasm for anyone watching.
Yeah. I think in terms of what we all like, I don't think we like talking about anything that's a trade as much as an investment, and there is no reason to invest in this.
Yeah, I'd say the one thing this was a short investment for us, and when it was trading at holy smokes, a lot higher than it is now. We were calling shorts all over the place. And here's what's one other reason I wanted to bring it up again today. I know none of our minds were going to change on, it's not a company I got excited about. There's just a million other more interesting companies in my eyes. But what has interested me is I've been watching the short position really closely. How many shares are traded short? Because you kind of expect that eventually it would unwind. People would be forced to buy in the market. Maybe the squeeze is what the holders are dying for. But guess what? Every week I'm seeing it, or every 2 weeks when I check, the short position has gone way up. Like it is so high now. 55 million shares are sold short. And as like a little reminder of how that works, to sell a share short, generally speaking, you have to borrow it from somebody's account, sell it in the open market, you pocket the cash, and then at some point in the future, you got to buy those shares back and return them. So only thing that strikes me now as why I would be too scared to short it at this point is because there's so many shares that have already been sold short. So seeing that stock price goes down, it's because people were borrowing shares, selling them, borrowing, selling, push the price way down. But now, even though the valuation still makes no sense, even at $1.5 billion, it's still way, way overvalued. But at some point, these shorts are going to have to buy 55 million shares. So even some half decent news coming from these guys could be enough to start forcing at least some percentage of those shorts to be like, okay, I've had my fun. I'm going to unwind this. And then as anybody knows through a squeeze, that's how it begins, right? Someone unwinds their position, goes higher. Someone else is like, oh crap, okay, I wish I had unwound my position. And it escalates from there. So like, not saying there's going to be a short squeeze. I still think this company's crap, but it's like that there's a massive risk overhanging now that didn't used to be there. So it's like, I wouldn't buy it, but I don't think it's shorted either at this point. So that was just
that's a good point, because let's say I'm looking when it was at, closed at $9, let's say which would have been double almost the market cap of what it is now. Good opportunity to short it. It isn't, I didn't know they had that many positions out. It's not I think it's pretty easy to get that margin call at like, you bought at 5 and maybe it went up to 556. That could probably trigger something that you have to go find some stock to cover, unless you really want to roll the dice on this. Do I think the longer term outcome a year from now is that we see $1 stock? Probably.
Yeah, it could. The problem, well, for us, not the problem for them, is that they've got too much cash. They've got $226 million sitting in the bank. So they are they're chilling. They're cruising. They have a lot of time to prove this thing out. If that cash balance was a lot lower, then I'd be like, okay, let's continue the strike. But now I'm just too much risk there that I've kind of lost interest.
What was their, I didn't, obviously the financials just came out. What did they burn this quarter, Declan?
Their net loss was 33 million.
Yeah, 33 million.
That's actually still a ton of money.
Yeah, it's a ton of money, but they got 10 quarters ahead of them, maybe.
Yeah. Which is long enough that it makes me uneasy.
At a certain point, they're going to cut back on that too, probably. Right. Not.
Well, it's interesting to like see where this pans out. Again, the financial situation is clearly not attractive. It's not clear whether they do have a competitive advantage, but it is nice to see that they are attracting customers. And these are, notably big name customers, especially from a, food standpoint or like fast food restaurant. They got Church's Chicken, Applebee's, and they mentioned a bunch of others. So that they are noteworthy names. And it's like they're talking about adding these AI voice devices to over 10,000 locations. So it is reasonable size. There's obviously a market adopting them to some extent. It's just to your point, Kev, you don't know if a short squeeze happens or it crashes. And it's just a matter of you're playing this game where certainly there are investors out there who thrive on it. But for me personally, as a long-term, long investor overall, I just would not want to touch this thing with a 20-foot pole or longer kind of thing. It's just, it does not look like something that is going to guarantee to pan out one way or another. And for that reason, I would just sit on the sideline and watch the chaos ensue.
Yeah, it's not for investors at this point. It's for traders that are willing to watch this thing every single day like a hawk. That's how you make money on it. You can't really passively invest in this one, in my opinion.
Yeah, exactly.
Well, SoundHound AI, say it a couple more times for the algorithm, SoundHound AI stock. That's all we got to say about it. Whatever. Maybe we'll cover it again in the future, but I think we've really beating this dead horse. That's the expression, right? I don't know. Maybe there's some animal activists that don't like that. We've beaten the stuffed animal. Whatever. Anyways, that's enough of that. That was a good chat. I mean, not our normal kind of format, but we're past the hour here. I think we've squeezed enough out of this episode. So you're hearing it from Kev, Declan, Peter. This is episode number 20. We'll see you guys next time for episode 21.